Gross, the manager of the world's biggest bond fund, is this morning issuing a warning about rising debt loads in Europe and right here in the United States. Scarlet Fu has more from our markets desk. Scarlet?
Good morning, Margaret. That's right. Bill Gross published his June investment outlook on the PIMCO website, and he devotes the space to talking about how it takes decades to build up the burden of debt, but that can basically spin out of control very quickly and change course into a full-blown crisis in just a matter of months. Now, with regard to the current situation in Europe, he says that sky-high lending rates and austerity measures may leave some countries with default as the only option, the only way out. Now, we saw how earlier this month, Greece's 10-year yield surged to 12.5%. Bill Gross says that countries can't cut deficits or grow their way out of debt. He also talks about, of course, the U.S. He says the debt cycle here in this country is becoming unsustainable. And keep in mind, the Treasury is selling some $40 billion of five-year notes today. And he says that as governments and companies have to delever and households have to delever, investors better get used to lower rates of returns, for instance, 4 to 6% annualized returns from a diversified portfolio of bonds and stocks. So smaller returns in the future.